Hello everyone, and welcome back to Talking Money and Stuff with Bob. Today I'm going to show you some changes I made to my portfolio. I've been making a lot of changes lately. I added a kind of a meme ETF that I'm seeing a lot of people talking about, and a gold ETF, because of course I love gold. Let's take a look. Last week was a very good week for me. For the first time, I broke the $200 a week barrier. Now, I thought I had done that earlier in the summer, but I actually added up the balances incorrectly. This was the first time that I made over $200 in a week on these covered call ETFs. That included $10 from a wonderful new gold ETF that I'll be talking about in a little bit. Wonderful in my opinion. Remember, none of this is financial advice. I just happen to think that this ETF might work for me. So we'll take a look at that. Total amount came to be $210. So I was pretty happy with that number. So I took those dividends and simply dripped them back in. Dividend reinvestment plan. Now, Fidelity won't do this automatically in the Survivor's IRA. It will not automatically reinvest. So I have to do all of this manually. So I basically take it to the nearest dollar. If I earn $22.57 dividends, I would reinvest $22. I'll take it to the nearest lowest dollar. And then just keep the odd pennies and odd dollars in the money market so that there's a small position there every week growing. That's what I've done here, and that's where that $210 went. Now, you'll note that I made $10.53 down there on the gold ETF. That's the NEOS ETF Trust Gold High Income Fund. And let's take a look at that right now and see why I went for that. As you can see, IAUI, the NEOS Gold High Income ETF, pays monthly, and it currently has an expense ratio of 0.78%. Not horrible for this kind of ETF. Not the greatest, but not the worst either. From listening to other commentators, I think this fund will probably return about the 10% range, somewhere around 10%. And that's all right. I want this to be a somewhat lesser volatility ETF, although some people argue gold can be very volatile, but there are some reasons that I'm getting into it, which we'll talk about. As I mentioned in my prior video, I really regard gold and other precious metals as the ultimate form of money. I'm not convinced that cryptocurrency is money. And of course, the US dollar is a fiat currency, so it holds value only because we stupidly trust the US government when the government says that a dollar is worth a dollar. The truth of the matter is, it floats, and its value will vary based on how people feel. Gold is similar to a certain degree, but it's also an industrial metal. It isn't just nice for jewelry. We need it. It's in the circuit boards of everyone's cell phone and computer. And basically for a modern industrial economy, particularly an electronic or digital economy, gold and other precious metals are necessities. So there is something else that you can do with gold besides simply stare at it and say, ooh, pretty, like our favorite Lord of the Rings character, Gollum. It has value. It is a store of value. It has been since time immemorial. So getting into gold might actually be a good thing, especially given what the BRICS nations are doing. In case you aren't aware, the BRICS nations are trying to come up with an alternative currency to the US dollar, which is currently the world's reserve currency. In the aftermath of the Russian invasion of Ukraine, with the United States of America trying to freeze Russian financial assets and deny them access to that global reserve currency, a number of countries have accelerated their attempts at creating a third currency. The first currency being their own national currency, the second currency being the dollar, which is the global reserve currency, and now they want a third one, which is probably going to be commodities backed and heavily gold influenced. So my particular theory, don't take this as investment advice, this is just my view, is that at some point the BRICS nations are going to make this happen. At some point a BRICS commodities-based currency is going to pop up. President Trump can delay it, but he can't stop it. It's going to happen. And those people who have investments in precious metals, particularly gold, might possibly stand to do very, very well. At any rate, that's what my theory is, and that's why I'm pretty heavily involved in gold investments. So, what does this ETF do? Well, From their own website, they try to offer monthly income through a data-driven call option strategy on gold exchange-traded products. I like how all of these funds claim that they are data-driven or they have some special strategy. Whatever. They're writing call options on products related to gold. They try to offer appreciation based on exposure to physical gold. We'll talk about that. And they claim to offer an accessible way to pair physical gold exposure with a high monthly income potential within a single ETF. Okay, fine. They're basically writing call options on gold, trying to capture the upside to those options contracts and deliver monthly income. There you are. If I've gotten any of that wrong, please feel free to chime in on the comments below, but that's how I personally am reading and interpreting this particular ETF. A good question to ask is, if you own this ETF, do you also own physical gold? And the answer is, sort of. If you take a look at the composition of this particular NEOS ETF, they actually own Goldman Sachs Physical Gold ETF, stock symbol AAAU. So, do you own physical gold? Kinda, but you own it through another ETF. So, my reading is that there is going to be a little bit of third-party risk here. As you can see from the dividend view, the NEOS Gold ETF is projected by Fidelity to only give me a little over $10 in annual income. Well, take that with a grain of salt. Literally, the $10 that I got just this past week represented the very first monthly dividend that this ETF has ever paid out. I've literally gotten in on the ground floor. So I expect that number to go up as the months go on and more distributions come in. What's also wonderful is the estimated annual income, which is now well over $18,000. I can't believe a few months ago it was around $3,000 or $4,000, and now estimated at $18,317. Now, as always, that is an estimate. Things can change. Do not take that to the bank, literally. But that's what I'm hoping will happen, that number will continue going up. So right now you can see MSTY is programmed to give over $4,700. YMAX over $2,900, and so on. And IAUI just $10.64. But again, that was the amount of the first dividend just the other day. I expect that number to grow as each monthly dividend comes in and I reinvest it back into the fund. As always, none of this is intended to be financial advice. I'm just showing you what I'm doing. This may or may not work for me. Time will tell. I may make a lot of money, I may make nothing. Again, the future will bring what the future will bring. I always tell my students that they should consider consulting a qualified financial planner licensed to work in their jurisdiction, and you might want to consider the same. I also believe everyone needs to do their own financial research. You need to make your own decisions in life and not rely on what a disembodied voice on the internet is doing. Remember, none of this is financial advice, and as always, keep investing, keep saving, and try to work for the future. Have a great 4th of July weekend coming up, and we'll talk again soon. Bye-bye.